Hey, what's up everyone? Welcome to SA Crypto Market Analysis episode 8, and the time of recording is 4:45 p.m. on the 10th of April, Wednesday the 10th of April. Graham Tennant, welcome to this episode.
Hi James, nice to be here again.
So Graham, we were talking about what caused the spike. Obviously, we're now starting to say, well, are we bullish? Has the trend reversed? But something I want to start off with, before we get into whether the trend is reversed, I want to talk about what caused the spike.
Yeah.
So it's come to light that there seemed to have been a whale algorithmically trading, and he put in, and this is speculation, but quite well supported speculation based on data, that this whale algorithmically bought a whole bunch of Bitcoin on the likes of Coinbase, Bitstamp, and one other exchange, I forget which one offhand right now, but one of the major exchanges. And he or she, whoever it may be, or the organization, set in these buy orders all at the same time, and it just sent the price through the roof.
Yeah.
Now you want to talk about how that resistance zone right there, that resistance zone right there,
Big orange area.
that is a perfect opportunity for a whale to place buy orders. Take us through that.
Correct. So yeah, I think it's always a little bit of a minefield trying to match the technical analysis side with the fundamental analysis side. But I myself have seen a couple headlines come through, saying that it was one individual or one organization that perhaps triggered this big green candle that we saw a couple of days ago now. And I mean, for the fact that it took place at this specific spot is not a coincidence, and that's because if you are looking to push a large amount of Bitcoin into the market, you need to have sell orders in order to fill your buy orders. So if the individual or whoever it was, the whale, let's call him the whale, is going to enter the market, we think this is a big green candle here. But if there was no real resistance, which is made up of sell orders, then this green candle would have been a lot bigger, because when you're going to move that a large amount of money into a smallish market by traditional asset class purposes, you're going to affect the price. So in summary, this orange area would be the resistance level. That's where we can expect to have a large volume of sell orders, and that's perfect for someone that's looking to push through a couple $1 million, because there you have people that are looking to sell you Bitcoin at that price. And if I'm a whale, I want to buy those, fill those sell orders, and it's intelligent just to do it across a number of exchanges and do it algorithmically. I mean, that's just the professional way to do it if you've got that much money. And once we cleared those sell orders out the way, you might find that in your other algorithms that start to look at the market and have different buy signals then start to enter. But the crucial thing is you would need that initial whale to move that big amount of sell orders here around the resistance level in order for the price to then move upwards. And that's what we saw. So I think that it's fair to put forward an argument that that would be the fundamental reason behind that move that we see in the price drop.
So it was a good move, the whale did his homework, and it was a pretty good move on his part, or their part, to place their buy orders at that resistance zone, because there would have been so many sell orders across the board. That's what you're saying?
Yeah.
All right.
100%, yeah.
Now, what's interesting to bring up, what's great about crypto assets is the data that we have available. Isn't that fantastic?
You can see their wallets,
exactly,
etc.
And it's so different to traditional markets, where it's a little bit harder to get the data sets from the various trading floors and exchanges, whereas here we have all the data available to us.
It's on the public ledger.
Exactly, and the sell orders, the buy orders, how much all the data is there.
Yeah.
I mean, as an analyst, how much does that excite you?
It's very exciting, and I think that if you look at a decentralized future and what that means for exchanges, and the fact that decentralized exchanges excite me. Yes, there's some challenges around it, as there are with the blockchain technology in general, but you have a third party like an exchange that you don't have to trust. why do banks and spend so much on marketing, and why do the different exchanges have such tight regulation and security around it? Because you need to trust that third party. And if you have an exchange or a bank that's based around cryptocurrency and decentralization, it becomes almost a trustless relationship, which is really exciting.
Very much so. Okay, so let's talk about now where we stand. So we've had this huge pump. What's the outlook? You're not confident of us seeing a heck of a lot more upside just yet. You're 50-50 on the fence. Tell us why.
Cool. All right. So just a quick summary. So we saw that we broke above this resistance level, which we discussed in the previous episode. So now the question is, now we've got this big green candle, what's going to happen now? Are we going to continue to move forward at a rapid pace after we had a bit of resting? I'm going to zoom in a little bit closer here into the 4-hour chart. So we got this big green candle, and then it looked like we could potentially really continue to move with real aggression upwards. But obviously, the last couple of days we've moved predominantly sideways. So now the question is, the market's rested a little bit. We've moved upwards, but on falling volume and not with too much conviction. So what is the next step from here? So there's two things I'm looking at. Number one is if we look at this RSI, so that RSI stands for Relative Strength Indicator. That's this pink line down the bottom here. And that's really an indication of the momentum in the market. Okay, so if you think about it, it's a bit like the revs on your car. So you might still be going, your car might still be going pretty quickly, but your revs are dropping for whatever reason. Maybe you're going uphill, or maybe, I don't know, you're taking your foot off the accelerator, or whatever the case is. And what we see here is that this RSI is clearly dropping over the period since the pump took place.
Right.
So I'm going to highlight that by just drawing an arrow for us so we can see nice and clearly. So we can see that this is falling, okay? But the problem with this is that the market is continuing to move higher. Okay, so all in all,
strength is falling, price is moving.
That's right. So this is what we call a divergence. Okay? And it's a bearish divergence because it's almost showing that the market is running out of steam, but the market's almost going higher, but almost on fumes. So it's going up without the momentum pushing up behind it, and that is a bearish indicator. So that's the one reason that I'm not keen to buy right now, even though all in all, the pattern looks like a bottoming out pattern, and it looks like this could be the start of the new bull trend. But if we look in the shorter term, that does concern me, okay, for where the price is going to go for maybe the next couple of days or couple of weeks. Okay. On the other hand, so that's the bearish problem that I see. On the other hand, we have this trend line that's developing on this consolidation area that we have had after the break. And this might look familiar because this is another
ascending triangle.
Well spotted. Okay, so this here would be our resistance level. Let me move this out the way. Okay, and we can see that every time it is getting up around the 5,300 mark, we're getting some resistance. Okay, but yet we are getting higher lows. Okay, along this trend line.
Yeah.
So that's a bullish pattern. So this tells me it's a continuation pattern. So those are the two signs I'm seeing right now, and it's difficult to show conviction either way.
Right.
So that's where you're sitting right now. The way I play this as a trader, if we break to the upside, I'd be keen to buy if we get above this resistance level.
So would you buy in? Would you buy in? Sort of have a buy order on BitMEX, for instance, say at about $5,350, somewhere around there.
It's a bit of a tough one because if the market moves above here, it's going to move really quickly. So to get a decent entry price just above this level is going to be quite tough. So probably what you're going to have to do, getting a little bit technical here, but you probably need to enter around this current price.
But what would be your indicator to enter?
Well, there wouldn't be. You actually have to take a bet on what to expect. That's your best way of ensuring that you get a decent full price. If you put your buy orders above here, which would be a break order, so your buy order is only going to enter the market after you instruct it to enter at a specific price. It is problematic because once your order goes in there, if the price has moved really quickly, you're going to get a bad fill order. So if you want to trade this, I would recommend that you actually buy in now, go long, put a pretty tight stop loss. We are seeing tight squeezing, so you can afford to put a pretty tight stop loss here because the volatility has pretty much disappeared. And if the market breaks up, you're going to get a really nice entry price. And if the market breaks to the downside, at least you are covered by your stop loss.
Right.
And likewise, look, if we break below this pink line, that's a potential shorting opportunity. So you could play this pattern both ways.
Target for breaking out of that to the downside?
To the downside, look, we discussed that in a little bit of detail in the last video. A retracement all the way to this previous resistance zone, which will now act as support, is possible. So that would be the full retracement of that move.
Right.
And again, that would be a really nice entry point. That would be your best case scenario if you're looking for a really low entry price. However, we should have areas of, I would think, support along the way. You caught me a little bit off guard, yeah. And now my chart's out of whack. But if we go from here, if we move straight down, we could probably look to set buy orders around 4,800, 4,500, and then the full retracement would bring us all the way back down here to 4,250. Right. So those would be buy order potential opportunities. To the upside, we've got this, which would be, if it breaks the upside, it should act as a flag. So that would be our flagpole, all right? And you would then measure the size of that flagpole to the upside. And that would even take us past this previous support level that we broke through all the way back in November last year. So before we get to our target of this pattern, we're definitely going to run into some resistance around about the 5,900 mark, and then 6,000 as a round number you figure would definitely act as pretty formidable resistance. So right. I wouldn't be looking to place my targets all the way up here. I'd be looking to take profit a fair bit earlier.
And if we do break to the upside, then the signals would surely be there that actually a reversal may well be on here.
Yeah, look, that would be further confirmation of this initial break. However, I mean, the fact that we get a pullback here is not going to it's not going to invalidate this structure, because it's very normal, and I mean, it's to be expected. The market's going to move in ups and downs and waves and take rest periods. So until we break below this structure here, potentially, which is this previous resistance level, this bottoming pattern stays intact. So I'm only starting to put my bear hat on again. We start to test this level and potentially break below it. Up until there, I'm wearing my bull hat, and I'm expecting the market to move up rather than down.
All right, well, there we go. So it looks like you're slowly but surely reversing in your bias.
Yes.
From being a bear to a bull at the moment, which is good news.
Absolutely.
For the Bitcoin bulls. Let's see where you stand next week.
100%. Let's see what happens.
Thanks very much for your time. Cool. We appreciate this episode.
Thanks, James.
Awesome. Thank you. Okay, so that's it for this week. Don't forget to subscribe to the newsletter, sacrypto.co.za, and check us out on Twitter and Instagram. On Instagram, we are sacryptoza, and on Twitter, sacrypto_. We'll catch you in the next episode. Cheers for now.